What's happening, traders? I just want to say a big thank you to you guys for all the love that I received from the past two videos. It seems there was some real valuable insight in there and you got some real nuggets from there. And I'm so happy for you guys. So continue with success. And again, I'm still going to be putting out these videos. I mean, your comments keep on flying through. Literally, your comments are fueling all of these videos that I'm doing, which is absolutely amazing. But the comments are coming so thick and fast. I don't even have the time. Otherwise, I'd literally be creating videos like 2, 3, 4 videos a day for you guys. But that's just not possible right now. So within this video today, I'm going to be discussing oh, and by the way, if you're new to the channel, please subscribe because I think we've got some awesome content here with an awesome community and you'll absolutely love it. So this video, we're going to be discussing the challenges that come with multiple layers of supply and demand, right? Because sometimes, when it hits event 1, that's the easy one, right? It hits a daily level and it's like, okay, done. Our alert ticks off. Now we're looking at event 2, and event 2 can sometimes get a little bit more tricky because we have to understand what level of either supply or demand that has to be broken, right, in order to trigger event 3. So sometimes that can get a bit tricky, but I should be able to clear that up in this video, maybe not entirely, so I'll create another video on it, but there will definitely be some parts that will clear a bit of that up for you. So let's just dive into the USD yen, which again isn't a market that I trade. I like to go into different markets for you guys just to show you that this thing works on any single market. But it doesn't work every time. Let's remember that, right? This isn't some sort of magic trick or some sort of sorcery. It's still a numbers game, right? And no matter how the supply and demand event chain plays out, there will be losses. Okay, simple as that. And please always remember that, right? This is a numbers game. Okay, just as long as you follow your rules, follow your strategy, and you do that 100% of the time, and your risk reward ratio is in the 3-to-1, 4-to-1, 5-to-1 as a minimum, and you could lose 50% of the time and still be on top every single month, right? So let's just take a look at this. So ideally, where we ideally would have wanted to get on this trade is right over here, just as a quick start, right? We've got this that came out of here. And why are we concentrating on this level? Because this is at the extreme of this move, okay? And not only that, after the extreme of this move, we can see that on a daily it took out that 2, which would have been basically an event 2, but on a daily. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days it took to come back in here. Perfect, right? Take profit up here, you're out. Brilliant, done. So let's just see what happens now. So out of this move, it's created another one. Again, this is not demand, guys, right? Why? Because it is out of our timeline, but nonetheless, we play the event, all right? And we can see the markets come into. Let me just make it green so it's clear. And place this here and make that solid. Okay, perfect. So now the market has come into this zone. All right, now I'm going to show you something here, which is something that you should not use all the time. Please do not use this all the time because it's just not necessary. It means you're going to have to monitor the trade even more if you use this, as your standard event when it hits a daily level. All right. So sometimes when the market comes into a daily, for event 1, event 2 is so far away that it has the potential to break event 2 and then just continue without you. It won't come back down to your trigger event at event 3, right? Which is the level that broke event 2. Okay, so sometimes we have to do things a little differently. Now let's just look at this. Now, ideally, when we're looking for the event, when we're looking within the event chain, we're usually looking for an engulfing candle or a drop-based drop or something like that, that is within this candle here, right? when it drops in. So if it breaks that, and it's usually always outside the zone of event 1. Okay, it's usually outside the zone of event 1. So what I'm trying to say is that sometimes, 80% of the time, the level for event 2 will be outside this zone, right? But this time, the market has dropped. I think it was around, let's have a look. The market has dropped 60 odd pips, right? So you have to wait 60 odd pips, and the market from there could potentially just break to the upside without us. So we're like, okay, cool, that's a bit far out for us. So number one, let's just draw in what we would see as event 2, right? We're looking now for the supply level that needs to be broken, and we're looking obviously for the level that has broken that. So number one, there's nothing really here that screams out to me as a level of supply for event 2, but there is a level back here, right? So let's not focus over there right now, but there is a level back here that's got a bit of resistance, and we can say, all right, cool, that's the ideal place that we would want some sort of breakage before we decide to go for our trigger event at event 3. But that's like 60-70 pips out right now. Yeah, so fair enough, we could still take that trade and still be profitable, but it just means we may miss out on it, right? So what I do now and again, only guys, right, please, only if it is too far out, I will drop down to a 15-minute time frame. All right, once it's hit the daily. Now, the only reason I do this is because that hourly one is too far outside the zone, right? So now, what do we see? So right now, we can see the ideal level. Now, there's 2 ways you could have played this, right? 2 ways that you could have played this. So number one, we have this area here. I probably would not even bring in that long wick because it doesn't matter at this point. And then we could have taken this area here for our entry. It's green. Oh, wrong one. Okay. But most likely what I would have preferred to have done is we've got a rally, base, and a drop here. And this would be the ideal event. And then we would place our trigger event for event 3 here. So this would have been our first trigger event, but it's very messy. So, not necessarily you would have taken it, or even I would have taken it, because that is messy as hell down there, right? It's even hard to even see that, right? But here, this is a bit clearer. Let's just make that there. Let's just turn that. Make that solid. Right, so this is the event 2 that now needs to be broken in order for us to get the trigger event 3. So this has been broken beautifully. Market smashed through it with a really long candle and then continue to the upside. This is perfect. This is what we want to see. Now what we want to see is the market come down, touch this area here, and then move out. And as we can see, that's happened. But the only thing, guys, is that when you start with a 15-minute zone, you then have to watch out for the hourly level to make sure that it actually breaks that, okay? So now you have to monitor the trade, and that's where it gets a little bit tricky, especially if you don't have the time, because sometimes you could set up an alert, but if you're busy at work or you're doing something else and you miss the alert and then you don't know that it's actually hit, it hasn't burst through it, then it has the potential just to come back round on you and you may miss it. That's why I say that don't use this all the time, only if the situation occurs where the hourly zone itself that is ready for event 2 is too far away, right? Like 60, 70, 80, 100 pips away. That's the only time that you should potentially use this. I would say don't even bother using it until you're actually more skilled within the event chain. But it's just a tip for those of you that sometimes find that your event 2 is too far away from your event 1, right? So then now we're going to have to go back and monitor event 1 to make sure that this event, which is our event 2, actually gets broken. So now this has been broken. So we're like, okay, cool. And if we look at what's our profit? Where's our profit margin up to? Okay, so, it could be within that gap, but just to be conservative, we can say it's right there. Okay. So now that this is broken, right? Where is another potential entry? So here's, all right. So just let me clear this up. There's 2 things that you could do at this point now, right? So now you're in a trade around here, and what are you in? You're risking 4 pips to make 66 pips. So that's probably around what? 16, 17 times your risk. Now, I think that's good in anybody's books, right? So if you're already at 17 times your risk, do you be greedy and just leave it and say, fuck it, I want to go for a home run? Ideally, no, because you've started on a lower time frame, right? So ideally what you want to do in terms of this point, so you're managing the trade correctly, is probably coming out with 50, 60, 70% of your profit at this point, and then letting the trade run. Okay, because at this point it's like, okay, it's hit that, it may go through it may not, we just don't know, because we've entered the trade too early, or we've tried to enter the trade early using our supply and demand event chain, but on a smaller time frame, to see if it will eventually break the real event 2 on the hourly, right? So now what the potential is if we wanted to, we could take this as an event 1, but on the hourly time frame to add to our position. And then we want to see event 2 being a hourly level of demand broken, and then the trigger event that broke that. Okay, so that's an example of how you could potentially add to this position, right? So I hope that has cleared this up just a little bit for you, because at the end of the day, it can get a little bit tricky. All right, so that's just a little tip for you when using supply and demand and looking at the multiple levels. And it's just time as well, guys. All right, your eyes will get accustomed to seeing these things the longer you use the strategy. Just don't expect fucking overnight drastic things to change your trading. This didn't happen overnight for me. So if it's not working for you straight away, it's not a thing of, oh, I'm just going to give up. It's a thing of, I need to stick with it, keep trying it, keep testing it over time, and then look at those results. Okay, and making sure that you're obviously journaling everything and not cheating yourself out of recognizing that certain things are working and certain things aren't. So let's go to another market, right? Like, I'm going to look at the US 30, which is basically the Dow Jones, and this thing just breaks all the fucking rules. Okay, so here we are on the US 30, which is basically the Dow Jones. I just wanted to show you how fucked up this number one, how fucked up. This market is an amazing market if you can trade it right, but it's so fucked up. It just doesn't play by the supply and demand event chain at all. If you can catch it, then brilliant, good. Just leave it, let it run, and just sit back and just watch yourself cream a bunch of money. But the majority of the time, this thing is fucked, right? And hardly ever works. So let's just take a look at what's happened recently. Because I just looked at this a minute ago, right? So let's just take a look at this. So let's just bring that here. Let's bring that here. Okay. And let's just take a look. So first of all, this would be our first entry, right? And look at that, pin bar straight off the daily. I would be thinking, yeah, fuck yeah, this is perfect. Now let's go in and look for the event chain, right? So let's just go in here. And again, we're dealing with multiple levels of supply and demand, right? So a few things. So number one, there is like multiple levels here before it actually touches this. Okay, so we've got one here, like just before it goes in, there's a bit of resistance, boom, breaks through, but then there's nothing up here that shows us, right? Or maybe we've got this level here that we could do potentially if the market comes back to it. Let's make that red so that's clear. And then we've got this down here, which gets absolutely crushed. And we've also got this level over here. All right. So the market broke through this one here at the top, smashed through this one at the middle. As we can see, there's plenty of resistance here at this demand zone, and the market barely broke through it and then bounced back up again, right? And we'd be expecting right now the market to hit this level here and then turn back around, right? But as it does, it doesn't. Well, that would have been a loss. Okay, so what do we do now? All right, cool. So now the market's making higher highs. So we're looking along the event chain and thinking, okay, so it's made a new high here. All right, what's around here? We've got this zone here. Perfect. Right, the market's barely broken through it. Let's move this over a little bit more. And now we've got a big break, right? So we'll be looking for a trigger event here. Boom, market smashes straight through it again, right? That would have been another loss, okay? So now this has made a new high above this high here, right? So let's just take that out. And while it's done that, it's actually done a rally-based rally. So this is our potential. We're looking for a break across here now. Okay. So the market's come back. It's got some resistance. So we're like, okay, cool. This is our potential entry. Oh no, sorry, it's not a potential entry because it hasn't broken through yet. My apologies. We're looking, it still bounces out. It's made another high, right? We'll keep this in. That's fine. So the market now has broken through it here. Nice break, right? And obviously you want to take the level that did that. So that is right there. And ideally we'll be thinking, all right, now we are in the money, right? We're in the money. So the market's come back up, moved out a bit nicely, gone sideways, and then continued to the upside. continued, and then decided to drop. And this is what I mean. Like, sometimes the market just doesn't play to supply and demand event chain, right? It just doesn't do it. And this is what you also have to understand. It's like, not every time it hits the daily, not every time this event two will play out, not every time event 3 will play out, because the market will just do other stuff. And that's just stuff we're not in control of. The only thing we're in control of is sticking to the supply and demand event chain, making sure that event 1 happens, event 2 happens, and event 2 happens in a strong fashion to really show us that it has the capability of moving. And as we can see, even if it does show us in a strong fashion, it still may not work out. But as long as we're following the rules, that's fine. If we didn't deviate, we didn't, try and rush in, we didn't do stuff outside of our rules, we can't be pissed at ourselves. All right. So that is that for today, guys. I hope this has helped in terms of just giving you some insight into the different layers. I think what I'll do is another date, I'll really dive deep into event 2. Okay, and just basically go through multiple markets, just looking at the different scenarios of how event 2 can actually play out. And I think that will be, help you out and allow us to clear up a few things when it comes to event 2 within that supply chain, because I know a few of you have found some difficulties in that area. So without further ado, I will be on another video, and I hope you all have an amazing week.